Namaste, good morning. A session to focus on TDS, TCS, followed by administrative aspects. First, we will start with tax deduction at source. Well, our friend was asking us about the COVID period rate, which is between 14th May 2020 till 31st March 2021, which is during this particular period, that is 14th May 2020 to 31st March 2021. The TDS rates were reduced by 25% from the existing rate. It was reduced by 25%. Okay, it was reduced by 25%. Not all, but majority of the things are reduced by 25% to make more cash available at the disposal of the assessee. These rates were amended or reduced by 25%. But such a reduction is not applicable for non-residents. Okay, they are not at all applicable for non-residents. Non-residents continue to have the same rate. The reduction is not for non-residents, and the reduction is also not for salaries. The reduction is also not for salaries. Okay, so a major set of people, salaries will not have this reduction. Similarly, non-resident payments, absolutely no change. Winnings will not change. Okay, they have not reduced the rate for winnings. Okay, so some payments like interest, contract charges, professionals, rent, dividend, okay, those are only coming under this particular purview. It is only payments of that nature and not for non-residents, not for salaries. Okay, so I have consolidated the table once so that you are clear about this, right? So 192 will not change, 192 will not change, winnings will not change. Okay, there is no change in winnings. Okay, there is non-residents, we are, as I told you, non-residents will not change. Okay, all these are mostly for 194 LB, that the infrastructure bonds, the REITs, etc. Okay, which are again more for non-residents. These are for non-residents, so those are not changing. Okay, so please understand what are all the provisions TDS has not changed. This is for a resident where it has not changed. This is for a resident where it has not changed. Okay, so to write it simply, for a resident assessee, non-resident no change. For a resident assessee, salaries, PF withdrawal, winnings, and cash withdrawal. On these four things, there is no change in that rate. On these four things, there is no change in the rate. Repeating, for a resident assessee, okay, the rates have not been reduced. Have not been reduced for salaries, PF withdrawal, okay, winnings, and cash withdrawal. In all other cases, remember the original rate, okay, minus 25% of that rate. If you remember 10%, minus 25%, 7.5%. If you remember 5%, minus 25% if the payment is falling within this period. Okay, so you need not remember the rate of reduced rates. You always remember traditionally the applicable rate. Okay, and reduce it 1%, it becomes 0.75, 2%, it becomes 1.5%. Okay, you need not remember this 0.75, 1.5. Don't take effort for that. Okay, you keep remembering the base rate. Okay, from there you can reduce. So to consolidate again, no provision, no rate change for non-residents, no rate reduction for non-resident. And we all know for non-residents, the HEC or should also be added. Okay, with regard to residents, in all sections, there is a minus 25% from the existing rate. From the existing rate, minus 25%, except the following four. Except the following four. Salaries, no rate change. PF withdrawal, no rate change. Okay. TDS on cash withdrawal, no rate change, and winnings, no rate change. Winnings, no rate change. Okay, this is what you need to remember. Otherwise, please remember the base rate. From there, reduce 25%. Now, progressing forward, what are all the amendments in the provisional aspects of TDS? What are all the amendments in the provisional aspects of TDS? Section 192 has couple of amendments. What that is? Salaries, assessees, okay, who earn salaries, employees. For them, there are some amendments. The first amendment is they can opt for 115 BAC. They can opt for 115 BAC, where an employee has intimated to employer that he would opt for alternative tax regime, then employer is duty bound to consider the provisions of 115 BAC and deduct tax. Okay, in the first month, that is in the month of April, the employer asks for a declaration from the employee. In that declaration, if the employee states that he would love to go for 115 BAC, then employer is duty bound to take that rates and deduct tax. Where the employee does not intimate anything, then employer will assume that he has not opted for concessional regime and deduct tax as per normal provisions. So, if the employee wants to go for this optional tax regime, he should communicate his intention. Non-communication will only be understood as you don't want to opt for that regime. Okay, I have already told you, even if the employee has opted with the employer this scheme, even if the employee has opted with the employer this particular scheme, he can later change his option. He can later change his option before filing of return, he can opt for normal and file for normal. Year to year basis, this option is available unless the individual is in business. Otherwise, in the case of salaries and all, year to year, this option is available. Okay. Then, a consequential amendment. From whatever we studied in salaries, this is a consequential amendment. That is, TDS on sweat equity shares issued by eligible startups. Sweat equity shares issued by eligible startup. It's a consequential. Okay, because these are taxed, not computed. The tax will be computed and the tax payment is deferred. These are taxed. Okay, earlier of 5 years, date of leaving employment or date of ceasing to be an employee, whichever. Okay. In the case of an employer being an eligible startup, here employer is a startup, the responsibility of deducting tax on perquisite of sweat equity shares shall be within 14 days of expiry of 48 months from the end of the relevant assessment year, date of sale of security, date of ceasing to be an employee, whichever is earlier. This is a consequential amendment. The amendment is already in salaries chapter. The TDS amendment is here. Okay, this is also an amendment in salary TDS. And then there is one other consequential amendment. Again, suppose the employee leaves on 1st May itself. Imagine a case, employee leaves on 1st May or employee leaves any month where the salary is only less. I have to deduct a tax of close to 12 lakhs, 14 lakhs, but his salary is only 1 lakh. Okay. So how can the employer deduct? In order to give the employer the relief, there is one other consequential amendment in section 191. In section 191 subsection 2. Okay. What is that? Direct payment of tax by assessee on sweat equity shares of eligible startup. Okay, this is direct payment by the employee. This is direct payment by the employee because there is all possibility that the tax that the salary available might not cover the TDS quantum also. So direct payment by the employee on sweat equity shares issued by a eligible startup. Okay, we have already studied deferring. Consequential amendment is made both in section 192, that is TDS, and section 191, that is assessee paying it. In section 191, it is specified where employer failed to deduct tax. Okay, this is applicable where the employer has failed to deduct tax, then employee has to pay it. Okay, remember, employer has failed to deduct tax. Failed means not intentionally. It can also be that he does not have the fund. Okay, then employee has to directly pay such tax in the same way. So 191, 192, section 17 all speaks about the same. Okay, in the case of 191, it is if 192 fails. That's why I first took 192. Okay, where the employer is unable to deduct, employee is liable to pay the tax. progressing forward. Nowhere I have given the COVID year rate because at the beginning itself I have given, and you remember the normal rate. You remember the 4 cases where it is not applicable. Otherwise, you can reduce it by 25%. Don't waste time in remembering COVID year rate. Okay. Now, section 194 dividend. This is reintroduced after very long years. After very long years, this has been reintroduced because now again dividend is taxable in the hands of the recipient, that is shareholders. Applicable for domestic company distributing dividend. Applicable only if the shareholder is a resident. For a non-resident, the rate is 20%, 115A and 195. Okay, this is only for resident. Threshold limit 5,000. Threshold limit 5,000. Rate of deduction 10%. Tax needs to be deducted only while making payment. There is nothing called credit or payment, whichever is less. Okay. Tax need not be deducted if dividend is paid by any other mode other than cash. They are meaning bonus shares. They are technically meaning bonus shares here. So, tax is not liable to be deducted if dividend is paid by any other mode other than cash. And provision will not be applicable for dividend paid by LIC, GIC and its subsidiary because majority of the time it is paid to the government. Interest on securities. Section 194A. Interest on securities. This provision is only for cooperative societies. Okay. Provision is applicable for interest paid or credited by a cooperative society to members or another cooperative society, and interest is credited or paid in respect of deposit with primary agricultural credit society. Okay, they will claim ATP, no doubt about it. But the interest paid to its members are coming under the taxation net. The interest paid by the member paid to the members are coming under the taxation net. Cooperative society is liable to deduct tax only if the turnover or gross receipts exceed 50 crores. Repeating, cooperative society is liable to deduct tax only if the turnover or gross receipts exceed 50 crores during the financial year immediately preceding the financial year in which interest is credited or paid. So, am I liable to deduct in the financial year 2021 depends upon my gross receipts of 1920. Am I liable to deduct in 2021 depends upon 1920. TDS provision we have seen even for individuals and HUF in section 194 major section. Gross turnover or gross receipt should have exceeded 1 crore or 50 lakhs as the case may be in the financial year preceding the relevant financial year, not in the financial year, because that we don't know till 31st March. So it is in the preceding financial year, if it exceeds, then current year, irrespective of your turnover, TDS provisions will become applicable. Here also, if the turnover or gross receipt exceed rupees 50 crores during the financial year immediately preceding the financial year in which interest is credited, and the amount of interest is the threshold limit are the same, 50,000 if it is a senior citizen, 40,000 in other cases, then TDS is applicable. Till last year, for any payment made to its members, TDS was not there. But now, from this year, from the financial year 2021, it is applicable.
Sir, what about ATP on this, sir?
Sir,
ATP on this.
ATP is claimed by a cooperative society. This is while they are paying the interest to members. Okay. A couple of years back itself, they brought cooperative bank into the TDS net. Now they have brought the cooperative society also into the TDS net. Cooperative banks are now part of everywhere TDS net. Okay. Now they are bringing cooperative societies also. Previously, or 5 years back, cooperative societies were away from the TDS net at all. Now they have brought, first they brought all the cooperative banks. Now they are bringing cooperative society. Okay. Section 194C amendment is something very interesting. Only a small amendment, but will have a larger impact. Now, before going into this amendment, I want to recollect whatever we know about section 194C. This is for contractual and job work payments, etc. What is known as job work? That is, when will you call a payment exclusively for job work and not for sale? When will you call? It all depends upon who supplies raw material. Okay, it all depends on who supplies raw material. If raw material is supplied by the customer, okay, what I do is simply job work. What I do is simply job work. Okay, once more shall I repeat? If raw material is supplied by a customer, even I buy some consumable stores, etc., but whatever I do is only job work. If I myself buy raw material, if I myself buy raw material and process, even if the product is of specialized nature, I print in the product. Okay, I manufacture t-shirts, print Bharatwaj Institute and give it to the institute. Still, what I do is only a sale. Just because I am doing it a specialized product, it will not take the shape of manufacture. So it all depends upon who supplies raw material. If the customer supplies, what I am doing is job work. If the customer supplies me cloth and asks me to stitch a shirt, what I am doing is job work. If the customer orders a shirt of this size to me, I go and buy cloth, stitch the shirt and give. What I do is a sale. What I do is a sale. Now, remembering this thing, there is a small extension that has been made. Okay, customer supplying raw material or an entity which is related to the customer supplying raw material. And the second, customer supplying raw material already there. The amendment is any other entity which is a relative of that customer, their supplying also will be known as job work. So what happens? People try to avoid, okay, this TDS by asking the job worker to get the raw material from a sister concern. So the customer is not supplying me the raw material, but the raw material is supplied by a person who is controlled by the customer. The raw material is supplied by a person who is related to that customer. I buy from them and give it to the customer. So the TDS provisions were not getting involved. Now that is getting sealed. The law says, in case of job work, whether tax needs to be deducted or not depends on who supplies the raw material. Normally, this is the key factor. Who supplies the raw material is the key factor for knowing whether tax has to be deducted or not. Okay, right? Progressing. If the customer supplies the raw material, then what the job worker does is more of labor contract, hence tax needs to be deducted. On the other hand, if the job worker himself purchases raw material, process and supply, tax need not be deducted even if the product is as per the specification of the customer, because this will be known as sales and not known as job work. Amended provision includes raw material supplied by the the amended provision has included raw material supplied by customer or its associates, not only the customer but also its associate, manufacturing or supplying a product according to the requirement or specification of a customer by using the material purchased from customer or its associate, being a person who is related to the customer, defined under 40A subsection 2. All relatives are defined under 40A subsection 2. So the amendment is, even a relative or an associate enterprise supplying the goods or raw material, I doing the process and giving it to customer, will come under TDS net. There are some rate changes in professional and technical services. There are some rate changes, okay, not just COVID year rate, but rate changes itself has taken place. It has taken place here. Fees for technical services which are not treated as professional service, the rate has become 2%. Okay, fees for technical services which is purely technical, which has nothing to do with professional work. If it is purely technical, then the rate has become 2% instead of the 10%. Previously, professional and technical both are 10%. Previously, professional and technical Both are 10%. Now, technical services is 2%. But what type of technical services? Sir, I engage a professional who offers technical service. I engage a person to design a system, okay, or security system. He is a professional, though he is doing technical service. Of course, flood of case laws are going to come. What is professional, what is technical, but now it is 2% for exclusively technical service. Exclusively technical service, the rate is no more 10%. Similarly, for operation of call center, the rate is 2%. For operation of call center, the rate is 2%, my dear friends, not 10%, the rate is 2%. And here, also in section 9, which is about non-residence income, both here and also in section 9, there is one other amendment. Royalty in the nature of consideration for sale, distribution, or exhibition of films. Royalty in the nature of consideration. This is pure professional. All royalty payments are coming under 194J because mostly they are professional. But royalty in the nature of consideration paid for what? Sale of a film. I sell a film. Okay. I give distribution rights. I give only exhibition rights to Amazon Prime. Okay. I am not giving the sale. I am not selling it. I am only giving exhibition right. Once or twice they can exhibit. Or I sell it itself to Amazon Prime. Or I give a distribution to somebody. In all these cases, okay, the TDS rate is 2%. The TDS rate is 2%. So shall I repeat this 2%? In professional, in 194J, normally rate is 10%. But 3 cases, it just becomes 2%. In 3 cases, it just becomes 2%. Call centers, 2%. Pure technical service without involving professional service. Pure technical service without involving professional service, 2%. Exhibition, sale, distribution of films, 2%. All others are 10%. Threshold limit is 30,000 except for director's payment. Any other payment other than salaries. So the sitting fees, etc., where threshold limit is nil. I again tell you, don't remember COVID year rate. Adu the data pathona, you will remember by minusing. You remember the main rate. Look through this chart. This is an amendment. Okay. 194C, 192. This one, all are questionable amendment in any of the forthcoming examinations. So these are okay. Otherwise, fees for professional service, other royalties, non-compete fees, all these are 10%. And in every case, the threshold. One advantage here is the difference between 194I and 194J. 194I rent, if my total rent receipt for all let out exceed 2,40,000. What does that mean? I let out my house property business for business purposes. I let out my house property for, let us take 18,000 per month. I let out furniture for 4,000 per month. So put together 22,000 to 12. I'm not seeing individually for house property, individually for furniture. Put together, it has exceeded. So recipient based, not service based, not rent lease based, recipient based. If there is one recipient for whom I am paying more than 2,40,000 for lease of various items also, still tax is liable to be deducted. Whereas here 194J, if somebody is offering both the technical and the professional service, and the bill is 25,000, 25,000, tax need not be deducted at source because it is service based and not recipient based. It is service based and not recipient based. Having said this, we all know that the threshold limit is so low that whether it is service based, recipient based, 30,000 is too low at quantum. This is for same dividend of mutual funds. It is same dividend only. Okay, whatever you studied in 194 dividend, aduveda, the same one, but this is for mutual funds. Provision applicable for payment made to a resident, because non-resident the rate is 20%. Okay, I will tell you again when we do the non-resident in respect of units of a mutual fund specified under section 10 subsection 23, units of administrator of undertaking and specified company. Okay, deduction is at the time of credit or at the time of payment. Illness or credit, we all know that they credit the dividend as if in a growth scheme, they keep crediting the dividend, they don't distribute the dividend. Okay, they credit the dividend, so that's why here it is credit, whereas 194 it is only at the time of payment. Rate of deduction 10%, threshold limit 5,000. Tax is liable to be deducted only on dividend and not on capital gains.
So this provision is applicable for a mutual fund, right?
Yeah. Okay, these are something which we studied already, just to recollect. Okay, interest from Indian companies or business trust. Interest from Indian companies or business trust only for non-resident and foreign companies. Only for non-residents and foreign companies. Okay, the date is extended. Michapadi rate is the same. The date is extended till 36/2023 in all these cases. Okay, investment in should be in foreign currency. Okay, in respect of money borrowed, etc. 5% plus HEC. 5% plus HEC. Okay, and in the case of units of rupee denominated bonds located in IFSC, 4%. In the case of these things, 4%. Okay, don't worry. When we are doing this evening, I will explain this provision again. Okay, that time you will be easier to understand when we do it along with non-resident. Inga in the date kagata. Okay, the date has been extended till 30th June 23. That's why it is known as an amendment. But I will redo it. I will redo it when we are going to do non-resident taxation. Now, one other major change that happened is TDS on cash withdrawal, a provision which was introduced in the financial year 1920 underwent a major change immediately. First, the provision that is introduced. Okay, if the total withdrawal exceeds 1 crore, repeat, if the total withdrawal exceeds 1 crore in a year, in a financial year, on that excess alone, tax is deductible at the rate of 2%. Okay, the original provision, my dear friend, the existing provision says that tax is liable to be deducted by a banking company, cooperative society engaged in banking and post office at 2% on withdrawals exceeding rupees 1 crore. 2% on withdrawals exceeding rupees 1 crore. Okay, so it is not on the whole quantum, it is only on the excess. Fine. What is the amendment that took place? Okay, what is that amendment that took place? We as a country are looking at broadening our tax net. We as a country, our worry is two ways. One, as a collection tax is low and number of assessees, okay, 2%, 3%, தாண்ட மாட்டேங்குது, okay, broadening the tax net. We have already seen, okay, that the finance minister is remarking that the number of cars running in Delhi is 3 times more than the number of taxpayers. A person who is having car will at least pay tax. That's what our previous finance minister Sri Arun Jaitley was saying in the parliament itself. So we need to broaden our tax net. Okay, so a provision is brought in section 194(1) to catch hold of those people who are not filing their return based upon their cash withdrawal from bank. Repeating, we are bringing a provision. The intention here is not getting tax. The intention here is getting information of a person who is not filing his tax return but withdrawing cash. So, the provision starts in a very interesting way, where an assessee has not furnished a return of income, where an assessee has not furnished a return of income for all 3 years, not even they are saying 1 year, okay, for all 3 years for which the time limit of filing return under section 139(1) has expired. Okay, for which the time limit of filing return of 139(1) has expired, then the threshold limit of cash is reduced to 20 lakhs. Then the threshold limit has been reduced to 20 lakhs. Sir, if you are regularly filing your return, even if you have filed return once in the last 3 years, your threshold limit is 1 crore, rate is 2%. Your threshold limit is 1 crore, rate is 2%, where you have not filed your return. 1 year ka? No. For all the 3 preceding years. Then the threshold limit is reduced to 20 lakhs instead of 1 crore. What will be the limit? What will be the rate? 2%. Okay, on cash withdrawals exceeding 20 lakhs up to 1 crore. More than 1 crore and 2%, that doesn't change, because for others also 5% on amount exceeding rupees 1 crore. 5% on amount exceeding rupees 1 crore. Okay, 5% on amount exceeding 1 crore. Just read it once. I have something to explain here. Read it once. Only for cash withdrawal, Nazir. Only for cash withdrawal.
Sir,
Raja,
sir, so if in April he withdraws 50 lakhs
I'm
and in
coming to that, Raja. I'm coming to that. Very interesting. I'm only coming to that now. Yeah, that's why I asked you to read it, so that this provision should be slightly understood both from your practical perspective and from the theoretical. I don't know how they are going to question. Okay, friends, section 194N. Okay, right? So let us take, okay, our friend, okay, Saurav withdraws. Let us take, okay, 2nd June 2021. Okay, 2nd June 2021. Saurav withdraws 25 lakhs. Okay, Saurav withdraws 25 lakhs on 2nd June 2021. Okay, right? He is withdrawing 25 lakhs. Now, the bank wants to know whether tax is liable to be deducted because his withdrawal exceeds 20 lakhs. The bank wants to know, okay, this is a cash withdrawal. So the bank wants to know whether tax needs to be deducted at source. Now the bank has to ask Saurav to give them the proof that he has filed a return at least for 1 year out of the 3 years. Which 3 years is the question now? Which 3 years? For that, we need to understand this particular sentence very calmly. Where assessee has furnished return of income, not furnished a return of income for all 3 years, for which the time limit under 139(1) has already expired. So if I look at 2021 financial year, okay, 139 time limit, okay, 139 one time limit expires only on 31st July. It can also be 30th September, but minimum it is 31st July. Minimum it is 31st July. So if the bank asks Saurav to give the proof for 2021, he will revert to me back saying time limit is not yet over. I can file it anytime. You please deduct it at the, you please don't deduct tax. So in that cases, what I will do is I will look for 1920, 1819 and 1718. Okay, I will look for these 3 years. I will ask amongst these 3 years, at least 1 year you give me the proof that you have filed your return. I will not deduct tax and source. So repeating the provision from its inception, because with due regards, some authors have written last 3 years. இல்ல நீங்க போய் ஆக்ட்ல பாத்தீங்கன்னா 3 years for which the time limit for filing of return is over. So let us be very clear that Saurav withdraws, okay, on 2nd June. 2nd June 2021, the time limit for filing of for the financial year 2021 is not yet over. So I cannot ask him to give me the proof for 2021. I will ask him to give the proof for 1920, 1819, 1718. In these 3 years, at least 1 year, you give me the proof that you have filed your tax return. If suppose Saurav fails to give for all the 3 years, then bank will be liable to deduct at the rate of 2% on 5 lakhs, amount exceeding 20 lakhs. So bank will be liable to deduct on 5 lakhs 2%. Okay, so this is suppose for example, okay, Saurav withdraws on, let us take 15th September 2021, the same 25 lakhs, okay, and he is an assessee whose due date is 31st July. In this case, I will ask him to produce 2021, 1920 and 1890. These 3 years, one of the year, because the due date is already over. If the due date for Saurav is 30th September, then what I will do is I will leave 2021 and go back 3 years. But if the due date is already over, okay, so the law has used the words, okay, where, okay, the time limit for furnishing return has expired, okay, is already over now. Then the threshold limit is 20 lakhs for this. Okay, which 3 years to choose is depending on this. So TDS on cash withdrawal, okay, 2% of withdrawals exceeding 1 crore, the parent provision for all people. But to widen the tax net, to see who is withdrawing cash more, etc., to widen the tax net, they have brought around one other provision. Intention is not collection of tax. Intention is to monitor those people who are withdrawing cash, which means they have earned the income. So they to widen the tax net. If for all 3 preceding years a person has not filed the return, then 20 lakhs becomes his threshold limit, and the rate of deduction is 2%, exceeding 20 lakhs up to 1 crore, and 5% on amount exceeding 1 crore. Okay, so somebody's mic is on, please mute it because of the recording going on. Okay, so This again can be a questionable, interestingly questionable area. Okay. Because the banks, from the bank's perspective, the bank want to understand. That should be the question. Not verum TCS applicable. The bank want to understand. The bank needs to know which are all the year he has to collect the data and see. Okay.
Sir,
Yeah, listening.
sir, in the same question, if instead of 2nd June 2021, it was 2nd June 2020, this provision is not applicable, right?
Yeah. This is only from 110. This is only from 110. I mean, sorry, 1st July. This is only from 1st July.
Okay, that example was for next assessment year.
Example is to make you understand which 3 years and not for a particular clear case. It is just
Right,
to
sir.
make you understand which 3 years. That's all.
Thank you.
Now comes the next new provision. This is introduced. New provision pata 194 dividend, 194K mutual funds, both are reintroduction. But reintroduction after long years. நிறைய பேர் மறந்துருப்பாங்க. Those sections were there. நிறைய பேர்னா நிறைய chart accountants கூட, because dividend was continuously taxable in the hands of the company. So previous provision. Now they reintroduced, but introduced pata, this is the one from 1st October 2020. They have introduced this, that is payment by a e-commerce operator to a e-commerce participant. E-commerce operator, electronic commerce operator, websites which you buy, be it Flipkart, be it Amazon, be it the various big basket, correct, which is the most popular now. Those are e-commerce operator. You and me are customers. The persons who sell the product, sell the services, are known as participants. Okay, I'm repeating. The portals are known as operators. You, me are known as customers. We pay the operator. For that, this provision is not there. Even if it is a company which is paying the operator, even if it is a business which is paying the operator, this provision is not there. Okay, whereas it is for operator paying it to the participant. Participant is one who displays the product or uses the website for these purposes. Okay. Provision applicable for an e-commerce operator facilitating digital or electronic facility or just a platform. Okay. Facilitating digital or electronic facility or just a platform where you can display InstaMojo. It's a platform. Flipkart facility. Okay, so it is a platform or a facility. Razorpay platform dana. You don't buy anything in Razorpay. You pay using Razorpay. Okay, Beam. Okay, all these things. Platform, facility. So we are only we are covering both these people. There is a reason. We are covering both these people. E-commerce operator. Provision is applicable for sale of goods and provision of services. It can be for goods also, because normally people think sale of goods means no TDS. Here it can be sale of goods or it can be some services provided. It can be sale of goods or I provide services. I'm a software consultant. Okay, I have a software. You can download it on paying such and such money. Okay, provision of services. Rate of deduction 1% of gross amount paid or payable. Remember, 1% of gross amount paid or payable. Yeah, normally if PAN is not provided, then 20%. Normally, if PAN of the recipient is not provided, 20%. An amendment was made in section 206AA where the participant fails to provide PAN, then deduction is 5%. Where participant fails to provide PAN, then here it is going to be 5% and not 20%. Okay, 1% but where the participant fails to provide PAN, then 5%. Okay, threshold limit irka? Yes, it is there only for individuals and HUF. Tax shall not be deducted if the participant is an individual or HUF and the aggregate amount of payment does not exceed 5 lakhs, provided such participant gives you PAN or Aadhaar. Very rare, very uniquely, I am recollecting something. In section 194C, discrete recollection, okay? In section 194C, if you are a resident transport operator, tax will not be applicable provided you furnish your PAN. And the maridu. If you don't furnish your PAN or declaration, okay, 20, I am not owning more than 10 vehicles, okay, then tax will be deducted. Like that here also, tax shall not be deducted when if the participant is individual or HUF. So no, obviously not for companies, not for others. And the aggregate amount does not exceed 5 lakhs. And the aggregate amount does not exceed 5 lakhs provided he furnishes his PAN or Aadhaar. However, even though, please understand, even though the provision is introduced from 1st October 2020, however, the threshold limit will be from beginning of the year, that is April 2020, and not from the, okay, the 5 lakhs threshold limit is for the year as a whole. The 5 lakhs threshold limit is for year as the whole and not just for the period from which the provision is introduced. Not just for the period from which the provision is introduced. Okay? Okay? Don't worry, I will again consolidate one. Deduction at the time of credit to the participant or payment, whichever is layer. The term gross amount will include all payments made by the e-commerce operator, all payments made to the e-commerce participant by the operator, even direct sale facilitated shall be included. Even direct sale facilitated shall be included. Okay, sir, if section 194O. Okay, section 194O. Okay, website displays product. This can be purchased by paying to the website. or the web portal, okay, who is the e-commerce operator. This can be also purchased by paying directly to the participant. Okay, this can be directly, okay, website sells product, displays product. Okay, please understand, websites sell product or displays products. They do both. What is the difference? Selling product means you pay the money to the website. Amazon la, we pay the money to Amazon. Amazon in turn pays to the supplier. There are some web portals which display the products. Using Razor Pay, using the various credit card facilities, you can directly pay to the participant, but the transaction is routed through website. The transaction is routed through website. Okay, now this law says, okay, TDS is applicable on the total of both. TDS is applicable on the total. It is not on any one thing. It is on the total of both the TDS is applicable. So, in this case, the law says it is not, okay. The term gross amount will also include all payments made to the e-commerce participant by the operator. Even direct sale facilitated by the operator shall be included. Okay, so you sell directly for 10 lakhs, you sell via portal for 5 lakhs. Now, on the 15 lakhs, they will reduce 5% and pay you on that 5 lakhs, whatever they have to pay. They will reduce it on for the total 15 lakhs, the 5% or 1%, sorry, 1% and give you. Okay, right? So that point is repeated. On the question whether the payment gateway operator has to deduct in the case of transaction taking place through digital platform. Okay, should Razor Pay, should credit card managers, okay, or should BMAP, or should RuPay deduct tax? Okay, it has been carried where it has been clarified where the payment gateway provides, okay, where the payment gateway provider gets an undertaking from the operator, the tax has been deducted by him, then they are not liable to deduct. So always they will, because they are just a facilitator or intermediary between the website and the participant. Okay, so they have said it has been clarified where the payment gateway provider gets a certificate from the operator, the tax has been deducted at source, then they are not liable to deduct again. Read up to this once. 1 minute. Okay. In the same 194O, I have one more explanation to make. Okay. Suppose, okay, there is a website which sells insurance policy. Okay. Let us take that GIC is the insurance company. Okay. Right. Watson, okay, insurer. Okay. Okay, I need to get myself insured. I approach, okay, okay, web portal for insurance. Now this web portal will pay GIC. Now this web portal will pay GIC. Are they liable to deduct tax at source? The answer is yes, because GIC is known as a participant, web portal as the operator. Technically, this person is known as the participant and this person is known as the operator. So tax has to be deducted at source. So tax has to be deducted at source. But what happens is, this premium is a recurring payment. Okay, in the next year, okay, Watson directly pays premium to GIC. In the next year, I go and directly pay the premium to GIC. Originally, I got the policy from a web portal, that is operator. Okay, subsequent year, I am directly paying the premium to GIC. Okay, GIC will continue to pay commission to the portal because they are the agent. GIC will continue to pay the commission. But should this transaction be understood as carried out indirectly through the portal, the clarification has been made. Provision specific to insurance agent and aggregator. Suppose a portal acts as an insurance agent, which means collects premium from various persons and remit it to an insurance company, then it will fall under the provision of service and insurance company will become an e-commerce participant. In the subsequent year, the policy holder directly pays the premium to the insurance company, not via portal. The question is whether it will still be regarded as provision of e-commerce service by the operator. It has been clarified. Where the insurance agent or aggregator has no involvement in the transaction, he will not be liable to 194O. However, only the commission paid will come under that 194C and H, etc. So in the subsequent year, it will not be treated as a transaction between the e-commerce operator and participant. It will be by the insurer and the company. However, the commission paid alone will be coming under the ADS net. Please read it once.
Sir, the gross amount inclusions alone, can you explain again, sir?
Which part? Gross amount inclusions means?
Yes, sir.
Right. Gross amount inclusion means if I am paying through some directly to the customer, to the participant. If I am paying directly to the participant, let us understand that big basket. Okay, big basket offers payment can be made to big basket. Okay, or payment can be directly made through payment gateway to the participant. Okay, these two are there. Okay, so suppose a product is there. Okay, purchase by paying it to big basket. Okay, it is 3 lakhs. Okay, purchase directly by paying to participant. But the portal is still big basket. But the portal is still this big basket, 2,50,000. So this TDS of 1% is on the total 5,50,000 and not just on 3 lakhs. Directly or indirectly, if the payment goes. So what will Big Basket do? They know that they have to pay 3 lakhs. They will deduct 1% of 5,50,000 and pay the balance to the participant. Okay, some questions to just look into it. Hope I'm audible.
Yes, sir.
Yeah, some questions to look into it. Okay, question number 1. Bharatwaj Limited, a startup which is eligible under 80 IAC, allots 12,000 equity shares to Santanam on 10th December 2020, being the date of exercising the option. The value on that date 180 as per prescribed method. Santanam is already having a total income without considering sweat equity share exceeding 10 lakhs. Compute the tax to be deducted at source, the timing of deduction and mode of computation. Okay, in the year in which the company is liable to deduct deduct and pay, the peak rate of taxation has been reduced from 30% to 25%. Will this make any difference in our working? Santanam contends that if the company fails to deduct, he shall not be liable to pay the tax on the same. Is the contention correct? Okay. TDS on ESOP. Okay. Perquisite value of ESOP. Perquisite value of ESOP. Okay. It says 180, 12,000 equity shares. So 12,000 into 180. Okay. So friends, okay. So the perquisite value of ESOP will be 12,000 equity shares on the date of the fair market value is 180. So 12,000 into 180. 21,60,000. His income, okay, the question says his total income has already exceeded 10 lakhs, which means he is in the 30% bracket. Whatever he earns, it is 30%. We assume that it is more than 10 lakhs, less than 50 lakhs. It is more than 10 lakhs, less than 50 lakhs. So this 21,60,000 tax at the rate of 30% as the total income has already exceeded, okay, rupees 10 lakhs, and it is assumed it has not exceeded 50 lakhs because of such other reasons. So into 30%, okay, and HEC at the rate of 4%, add HEC at the rate of 4%, okay. So total tax on ESOP, total tax on ESOP, okay, will be 6,73,920. 6,73,920 total tax on ESOP. Okay, the company is liable to deduct such a tax. The company is liable to deduct such tax. Okay, 4 years from the end of the relevant AY. Okay, which means in this case it has been allotted on 10th December 2020. So 2021 financial year, 21-22 assessment year, okay, 4 years. So 31-3-26 in terms of assessment years. Okay, so 4 years from the end of the relevant assessment year, okay, leaving employment, okay, sale of shares, okay, whichever is earlier. Okay, the company is liable to deduct, okay, it will compute, but the company is liable to deduct not in the financial year 2021, but in any of the subsequent years, whichever is earlier, whichever is earlier. In the year in which the company is liable to deduct and pay, okay, the peak rate of taxation has been reduced from 30% to 25%. Will it make a difference? Okay. Part B. Okay. Only taxation or deduction is deferred, not computation. Okay. In other words, income will be taxable at the rates prevailing in the year of exercising the option. Okay, I am not deferring. Income is taxable in the year in which the option is exercised. There is no change. I am not deferring the computation. I am only deferring the taxation of it. Okay. Hence, any change in tax rates post allotment will not affect the overall tax to be deducted at source. Okay, in the year of deduction, what rate is not at all relevant? Not at all relevant for me. So that will not affect at all. Santanam contends that if the company fails to deduct, he shall not be liable to pay tax of the same. Okay, part C, section 191, subsection 2. Section 191, subsection 2. அதுதான் introduced. Okay, where company fails to deduct tax on ESOP, employee, who is the assessee, is liable to pay directly such tax. Okay, and the same point, 4 years from the end of the relevant assessment year, leaving employment, sale of shares, whichever is earlier.
Sir, this employee paying is like advance tax, sir?
No, sir. It is self-assessment tax. In the year in which you are paying, it is self-assessment tax of the previous year. Question number 2. Mamekam Limited has made the following payments. Seek your advice on the tax to be deducted at source. The company has 3 shareholders: Rishikesh Limited, Rishikesh Limited holding 40%, Hari holding 59%, Mrs. Hari holding 1%. Total dividend proposed to be distributed amounts to 4 lakhs. Okay, part A. Total dividend 4 lakhs. Okay, payable to Rishikesh Limited, okay, who is holding 40%, 4 lakhs into 40%, okay. Section 194 is applicable. Section 194 is applicable, my dear friends. Section 194 is applicable. They have not given the date of payment. Take it as 10%. Take it as 10%, or you can write 2 answers if it is 10%. If it is falling between 14th May and 31st March, 7.5%. But that is the second part is only an optional. More it is about provisional understanding. Okay, 10%, 16,000. Payable to Mr. Hari, who is holding 59%. Who is holding 59%. Okay, so 4 lakhs into 59%. Okay, so section 194 is applicable, so you will deduct it at 10% or 7.5% as the case may be. Payable to Mrs. Hari, who just holds 1%, who just holds 1%. Okay, okay. Section 194 is not applicable. Okay, Not applicable in the sense, not applicable means TDS need not be deducted as the total, as the quantum has not exceeded threshold. 5,000 is the threshold. So in the case of Mrs. Hari, it has not exceeded. So don't deduct.
Sir,
Yes, sir.
sir, suppose if dividend is declared 2 times in a year, then how to check this threshold limit of 5,000?
Sir, company will have the shareholder data, right? They know to whom they are paying. That's not difficult, sir. That's not difficult.
No, suppose they are paying 4,000 in the first shot to a shareholder, and next time it is 10,000. Then should you deduct TDS on the 10,000 or the entire 14,000?
14,000 on the entire 14,000.
Right.
Interest on debentures payable to a senior citizen 14 lakhs. Okay. Part B, interest on debentures to a senior citizen. Okay, 14,000. 14,000. Because I took this up not because it is an amendment, but I want to make it clear. In the 50,000 and 40,000 threshold limit under 194A is only for banking companies, post office, and cooperative banks. Repeating, this 50,000 and 40,000 threshold limit, 50,000 for senior citizen, 40,000 for others, is only for banking companies, post office, and threshold. For all others, the threshold limit continues to be 5,000. A company paying interest on debentures. A company paying interest on debentures. They can give lower TDS certificate, all those things are different. But other things being constant, a company giving interest on debentures, if it exceeds, okay, if it exceeds 5,000 rupees, okay, they are liable to deduct tax at source. So the company is liable to deduct, okay, the tax at source. The increased threshold of 40,000 slash 50,000 for senior citizen, okay, is only for interest paid by banks, post office, cooperative banks, okay, and not applicable for companies, okay. These are not applicable for companies. That's why I took up this question. Because many a time the other doubt is also in the 80TTB, can I claim for interest on debentures received by a senior citizen? No. It is also 80TTA savings bank, 80TTB savings bank, recurring deposit, fixed deposit of banks now. It is not available for all type of other interest which the senior citizen earns from TVS Finance, from various companies they earn. That is a different provision. Okay. Payment made to a job worker for purchase of goods 8,75,000. The job worker is supplied goods by Rishikesh Limited. Already we know that Rishikesh Limited is a substantial interest holder. Already we know that Rishikesh Limited is a substantial interest holder. He is holding 40%. Anybody holding more than 20% is a substantial interest holder and is a relative. And the finished products is supplied by job worker to Mamekam Limited. Okay, part C. Okay, Rishikesh Limited is a substantial interest holder, which means holding, which means that is Mamekam is holding 20% or Rishikesh is holding, sorry. Rishikesh is holding 20% or more of the share capital. Okay, so it is a substantial interest holder. Okay, section 40A subsection 2 specifies that a substantial interest holder is a relative. Okay, is a relative. The section 40A subsection 2 specifies that substantial interest holder is a relative. Okay, going by this facts, okay, okay, according to the amended provision of section 194C, according to the amended provisions of section 194C. Okay, whatever is the amended provision of section 194C, okay, goods supplied by a relative and the finished product supplied by the job worker will be attracted by TDS provisions. Okay, I just changed this as raw material supply, not goods. Raw material supplied by a relative and finished product is supplied by the job worker will come under the TDS net. So in this case, okay, 8,75,000, assuming the job worker to be a firm or something non-individual. If it is individual RCF, 1%. So tax has to be deducted at source. Payment of 75,000 per month to Kalahasti Limited, a company which operates as a call center for Mamekam Limited, according to section 194J. Okay, call centers will be falling under 2% TDS net. Okay, it is not a 10% to 2%. The total payment exceeds threshold. So what is the total payment made? 75,000 per month. So 75,000 into 12. Okay, 9 lakhs. 2% is the rate for, okay, I am assuming, okay, all these things I am working out in the base rate. நீங்க example, if you want a better to give COVID rates also. Payment of 1,20,000, that is 30,000 per quarter, to an electrician who is purely rendering technical service. Okay, where only technical services without involving professional service is rendered, then the TDS rate has been reduced to 2% under 194J. So in that case also, TDS rate has been reduced to 2%. Okay, quantum paid exceeds threshold. So what happens? Okay, the payment made is 1,20,000. The rate is 2%. Okay, the rate is 2% and the quantum is 1,20,000 into 2%. Part F, payment to auditors, normal. Okay. Part G. Okay, payment of sitting fees to directors. Okay, threshold limit nil. That is right from rupee 1 it is taxable. Okay, they have paid 25,000, 10%, so 2,500.
Sir, is there any criterion to distinguish between professional or technical service?
Going to be flood of case laws. No. Bank of Madurai approaches you to seek opinion on the tax to be deducted at source in the following circumstances. So basically, we are progressing to 194M. Mr. Narahari, a businessman, withdraws 2 lakhs per month. He has not furnished his return for 1718, 1819, whereas he has furnished the return for 1920. And he has furnished the return for 1920. Okay. Total withdrawal. Okay. It is 2 lakhs per month, which means 24 lakhs. 24 lakhs. Since Assessee has furnished the return for at least 1 year out of the past 3 years. Here I can write past 3 years because it is not a single date. It is all through the year. Okay, it is all through the year. So in the year 2021 he has withdrawn. So okay, so and the provision itself is introduced in a later date only. So, since assessee has furnished the return for at least 1 year out of the past 3 years, the threshold limit is rupees 1 crore. Okay. Hence, tax is not liable to be deducted by the bank. Okay. So, hence the tax is not liable to be deducted by the bank. Avinash, a businessman who commenced the business from 1718, withdraws 2 lakh for 50,000. He has not furnished any return so far. Okay, 1718, 1819, 1920. 3 years is over also. But the question, the law has not said, okay, anywhere. Suppose 3 years have not lapsed. All those clarifications are not made. So if they have not filed in the last 3 years, then there is an error. Okay, now part B, total withdrawal. Okay, 2,50,000 into 12, 30 lakhs. Assessee has not furnished, okay, the ROI for all 3 years preceding. Okay, assessee has not furnished. Okay, hence the threshold is rupees 20 lakhs. Okay, bank is liable to deduct tax at the rate of 2% on the, okay, more simple amount exceeding rupees 20 lakhs. Okay, other TDS provisions, if it exceeds on the total quantum, if interest quantum 14,000 into 10%, not on the excess. Okay, yeah, but here 194 N is unique, it is only on the excess. So what bank should do is only on 10 lakhs they should deduct this 30 lakhs minus 20 lakhs into 2%. Okay, the bank is liable to deduct on 20,000. Okay, when will the bank deduct? After 20 lakhs, in the last 4 months. December, Jan, because he is withdrawing 2,50,000 every month. Okay, up to November, the bank will not be worried. December, Jan, Feb, March, in the last 4 months, for each 2,50,000, they will deduct 2%. Annapurni, a fashion designer, has withdrawn 15 lakhs till 30th June 2020. That is before the date of introducing the provision. Withdraws 7 lakhs between 1st July and 31st March. Okay, remember the person has withdrawn 15 lakhs. Should the threshold limit be computed from the date of introducing this provision, which is 1st July? Appadina, she has only withdrawn 7 lakhs. Or should the total years, should the entire year's withdrawal should be taken? Okay. Okay. For computing the threshold limit, the whole year's withdrawal should be considered. Okay, for computing the threshold limit, last year itself it has been clarified. I will again talk about this in 194O along with the 206C 1H. You will get to understand very detailed about this computation of threshold. In both those cases, it is interesting. Okay, but here for computing the threshold limit, the whole year's withdrawal should be considered. In the given case, the withdrawal, okay, comes to 15 lakhs plus 7 lakhs, okay, 22 lakhs, okay, 22 lakhs. If Annapurni has filed a return for at least one out of the past 3 years, then TDS provisions under 194N will not apply. Okay, then in that case, TDS provision will not apply. Where she has not filed, then TDS will be, okay, 2% of rupees 2 lakhs, that is excess. Okay, so for doing the threshold limit, for computing the threshold limit, take the whole financial year. Even last year the amendment was so, when 1 crore was introduced, the whole financial year should be taken and not a singular period, or not the period post amendment alone. I will talk about this in somewhere else also. Coffee Breweries Association has not filed returns from their inception, as they have their entire income exempt. That does not give them the benefit anyway. They make cash withdrawal 10 lakhs every month to pay various expenditure. Total withdrawal for the year, okay, 10 lakhs into 12. Assessee has not filed a return for any of the past years. Bank is liable to deduct tax under 194N. Quantum of deduction. Amount exceeding rupees 20 lakhs, but up to 1 crore. Okay, so 80 lakhs into 2%, okay, 80 lakhs at the rate of 2%, they need to deduct, okay, on the amount exceeding rupees 1 crore, in this case, okay, 20 lakhs, okay, the deduction will be 5%. The deduction will be 5%. Okay, so 20 lakhs into 5%. Okay, total tax to be deducted. Total tax to be deducted 160 plus 1 lakh, 2 lakh 60,000. The bank is of the opinion that the said section is only for business associates. The answer is no. Nowhere the word has said for associates carrying on business or profession. Okay. Section 194N is applicable for all cash withdrawals. Okay. The person withdrawing, okay, may carry on business or profession slash may not also. Okay. So irrespective of this, this provision is applicable. 20 lakhs, 1 crore, இதுதான் limit தவிர there nowhere it has been said it is only for business associates, etc. So even if you and me individuals are withdrawing, still it is applicable. Specify the unique feature, part F, unique feature of 194En. Okay, tax deducted is not the income of the assessee. Normally, I pay you some money for professional service. You have offered me some professional service. I have to pay you 1 lakh. I pay 90,000 and pay 10,000 as TDS to the government. So your income is 1 lakh. Your income is 1 lakh. Job work income is 1 lakh. Salary is income is that quantum. Okay. Whereas 194 Noda's unique feature, you are withdrawing cash only. The income kadayadu. The TDS that is deducted, the tax that is deducted cannot be treated as income of the assessee. It cannot be known as the income of the assessee. It will be available as a tax credit. But the unique feature of this section is it cannot be known as the income of the assessee. Okay. Okay. Right. We'll complete this one more question and then take the break. Okay. So the tax that is deducted is not regarded as income of the assessee. That is a very unique feature of 194N. In all other cases, the tax deducted is income. Question number 4. Dummies Prime is an e-commerce operator as well as OTT platform. Following payments are made and seeks your opinion on the tax to be deducted at source. Purchased the film Annate for exhibition in OTT platform 45 crores. My dear friends, it goes to 194J. Okay, sale, distribution or exhibition of films. Okay, the payment made is taxable. Now that royalty is taxable at 2%. Okay. Okay, section 194O is my major coverage in this section, part A. But this is different. According to section 194A, sale, okay, distribution and exhibition of films is treated as royalty payments and tax is liable to be deducted at 2%. Okay, tax is liable to be deducted at 2%. So here it is 45 crores. Okay, 2% is the rate. So 45 crores into 2%, 90 lakhs will be the TDS. Okay, I'm doing it without considering the COVID real rate. Okay, right. Payment to Messrs. Style Limited for sale of their product 8 crores. Okay, part B, payment to Styles Limited. Okay, the total quantum is 8 crores. Okay, this will fall under section 194O. Section 194O is applicable. Okay, section 194O, rate is 1%, where PAN is not provided 5%. Okay, threshold limit is applicable only for individuals and HUF, where the payment does not exceed 5 lakhs and the person provides PAN or Aadhaar. Tax bill now. So here it is 8 crores. Okay, 1% is the rate. Okay, it is not an individual. Okay, anyhow, styles limited or styles whatever it is. Okay, 1%. Payment to Messrs. Saravana and Co., a firm, for selling their product 3 lakhs. Anna, it is a firm. It is a firm. For individuals and HUF only, for individuals and HUF only, the threshold limit is applicable of 5 lakhs. This is a firm. Okay. Payment to Saravana and Co., a firm. Okay. Threshold limit is only for individuals and HUF. Okay, so firm threshold kadayadu. Whatever may be the payment, they are liable to deduction of tax at source. Okay, so 3 lakh into 1%. Payment to Miss Ranjini. So it is a individual for selling makeup equipments 4,80,000. Payment to Ranjini. Okay, 4,80,000. 4,80,000. Okay, nil. Okay, assuming the person has provided PAN or Aadhaar, okay, the rate is nil because it has not exceeded the threshold. Threshold limit is for individuals. Threshold limit is for individuals and HUF. Payment to Mr. Srihari for sale of accessories 4,10,000. Srihari fails to provide PAN. Payment to Srihari, Assessee, fails to provide PAN. So even though it has not exceeded threshold limit, but unfortunately the rate is 5%. Unfortunately, the rate is 5% because where PAN is not provided, the rate is not 1%, 5%, and the threshold is not going to be there. And the threshold is not going to be there. So 5% is the rate of deduction. 5% is the rate of deduction. Okay. Payment to Dinesh Jain for sale of his SFM classes. Payment of 7,50,000 is direct sale using the platform and money is received by Dinesh directly from the gateway. 8 lakhs is received through e-commerce operator. Okay, repeating, 7,50,000 is directly received by him and 8 lakhs is only received by the operator, but the operator is liable to deduct for the entire 15,50,000. For the entire 15,50,000. Payment directly to payment gateway. Okay, payment directly through payment gateway 7,50,000. Payment, okay, through the operator. Payment through the operator 8 lakhs. Okay, so total payment, okay, 15 lakh 50,000, increasing the threshold limit of 5 lakhs. Okay, now, okay, according to the clarification provided, okay, CBDT gave the clarification. Okay, according to the clarification provided, the whole of the payment is liable for TDS. In other words, the operator has to deduct on the whole quantum, be it direct sale or through the operator. Okay, so this is taxable at 1%. Okay, 15 lakh 50,000 into 1%, 15,500. The operator will deduct from 8 lakhs 15,500 and pay. Okay, the operator will deduct from 8 lakhs 15,500 and pay the balance to DJ. Okay, okay. Payment made to Mr. Santosh for sale of software. Payment up to 30th September 1.5 lakhs. Payment from 1st October 4 lakhs. Okay, this I will keep it pending. I will teach you 2061H also. At that time, I will touch upon this provision also. Okay, both as the same clarification by CBDT in a singular circular, they clarified both. Okay, at that time you will get more knowledge about this, and we'll complete this part alone. We'll take a break. Time, I know time now is 8:15. Okay, I will meet you around 8:30. I will meet you at 8:30. Okay. Uh, sorry. The next arena, again, a questionable arena because of the two newly introduced sections, is tax collection at source. Tax collection at source. Here again, the COVID rates are applicable. Here again, the COVID rates are applicable except for liquor. Except for liquor, all other places COVID rates are applicable. Liquor alone remains to be the same. Okay, in all other places COVID rates are applicable. Okay, yeah, overseas remittance, because it's like payment to a non-resident. It is like a payment to a non-resident here. Okay, all others are resident. Here overseas remittance, okay, it's like payment to a non-resident. Okay, introduce on the 1st October that provisions are. Please look at the table once. Okay. Uh, okay. In this, the questionable area are the scrap. Okay. This is a questionable area. Okay. This timber might be, and motor vehicle this time might be a questionable because something new has come up. Okay. Don't worry. We will recollect that. The first introduced section is subsection 1G, overseas remittance or an overseas tour package. overseas remittance, okay, all remittances, or overseas tour package, 15 days to Europe, 10 days to US, 5 days to Dubai, 3 days to Singapore. Like that, there are various tour packages, okay, outside, okay, overseas, okay. This provision is applicable for an authorized dealer who receives money under LRS, that is Liberated Remittance Scheme, and also for a person who operates tour package, okay, who operates tour package. Tax has to be collected, okay. Remember, the tax has to be collected at the time of debiting or at the time of receipt, whichever is earlier. Tax has to be collected. Normally TDS rate is 5%, but there are going to be variation. Normally TDS rate is 5%. Okay, TCS rate. Rather, rates of TCS applicable for other collections. Other collection means other than tour package. So for tour package, no threshold. Remember, for tour package, no threshold. Okay, 5%. Other than tour package, what are all? Up to 7 lakhs, irrespective of the nature of collection, nil. Please understand, in the 7 lakhs tour package kadayadu. Tour package right from rupee 1 TCS collection 5%. This is for other collection, which means other than tour package program, okay, up to 7 lakhs nil. Amount exceeding 7 lakhs, 5% on the amount exceeding 7 lakhs. 5% on the amount exceeding 7 lakhs. But one facility given is where the remittance is towards a loan obtained from a foreign financial institution for the purpose of higher education. Okay, for okay, Harvard University or Oxford or Michigan, or okay, where people are going and studying, there itself the fund has been obtained loan, but the payment is going from India, so parents are paying, etc. Quantum of payment exceeds 7 lakhs. Okay, what I have not written is in a year only. 0.5% of the aggregate amount exceeding 7 lakhs. For loan of educational institution alone, okay, it is not the whole quantum. It is not 5%, it is 0.5%. It is not 5%, it is 0.5%. Is it so? My video is not visible. இது ஹைலைட் பண்றதெல்லாம் வருது இல்ல. Okay, friends, shall I repeat the provision? Okay, this is for payment outside India for liberalized scheme and also for tour package. Tour package no limitation. That is no threshold limit. Right from rupee 1 TCS, taxes to be collected at source. Right from rupee 1, taxes to be collected at source. Only for other payments, there is a threshold limit of 7 lakhs. Over and above 7 lakhs, 5% on the amount exceeding 5 lakhs. Only relaxation is educational loan repayment. 0.5% of amount repaid, not interest repaid. That's 0.5%. Principal plus interest. Okay, if it is exceeding 7 lakhs in a year, 0.5% should be the TCS. Then come the provision which shook our entire financial structure as to why. Okay, 2061H, sale of value TCS on sale of goods exceeding 50 lakhs. Okay, let me be clear. For a customer, if there is a sale in a year exceeding 50 lakhs, TCS is going to be governed. Patiently, let's understand it. Provision is applicable for seller whose gross turnover has exceeded 10 crores in the immediately preceding financial year. So, the provision is for 2021, is this applicable or not, depends upon your turnover of 1920. For 2021, is this applicable or not depends on the turnover which you have made in the financial year 1920. If in 1920 your gross turnover has exceeded 10 crores, then in 2021, 206C1H is applicable for you. If in the financial year 1920, your gross turnover has exceeded 10 crores, then 206C1H is applicable for you for financial year 2021. Provision is applicable for a seller who receives any amount as consideration. எதனால இதை நான் ரொம்ப இம்பார்ட்டண்டா சொல்றேன்னா, on topல I might have given sale value, but it is the consideration which, ஏன்னா TCS மாத்திரம் மணி வரும்போது தான். Okay, goods sell பண்ணிட்டு you need not pay me my consideration, at least pay TCS னு கேட்க முடியாது. This is logically, if you understand, only when I am collecting the money, I can collect the TCS also, tax also. So, provision is applicable for a seller who receives any amount as consideration, even advance, for sale of goods exceeding 50 lakhs in the previous year. So you can understand threshold limit as 50 lakhs. You can understand threshold limit as 50 lakhs. And the point I am again saying is, in the previous year, I have a relevance for highlighting this. Okay, in the previous year, it is for the whole year, even though the provision is incorporated on 1st October 2020. I'll come to that. That's what I said in 194O and 206C. 1H has the same clarification. TCS rate, 0.1% of the consideration, not the whole consideration, 0.1% of the consideration exceeding rupees 50 lakhs. 0.1% of the consideration exceeding rupees 50 lakhs. Now we saw this 194N, okay, on the amount in excess. Where the buyer fails to provide PAN or Aadhaar. Where the buyer fails to provide, okay, actually fails to provide, okay, where the buyer fails to provide PAN or Aadhaar, tax is twice the rate or 1%, whichever is higher, 1% higher. 0.1% into 2 makes it 0.2%, or 1%, whichever is higher. So 1%, okay, twice the rate or 1%, whichever is higher. So you can be sure it is 1%. TCS is not applicable if the buyer is government, local authority, embassy, import of goods. Hence, it is understood that it is only for local purchase and not import. Okay, up to this, read it once.
Sir, it is only for goods and not for services.
Yeah, it is only for when a services TDS, TDS and the professional வந்துரும்ல 10%.
So, but ஒரே மாசத்துல goods service இருந்தா என்ன பண்ணலாம்?
இல்ல சர்வீஸ்னு நீ எதை சொல்ற சொல்லு.
ஏதாவது கம்பைண்டா goods and service இருக்கலாம்.
அதான் சொல்றேன், அந்த சர்வீசஸ் பார்ட்டுக்கு இட் வில் பி ஒன்லி 194J. எப்பயுமே இதான் ரூல், நோ டிசிஎஸ் இஃப் தேர் இஸ் டிடிஎஸ். திஸ் இஸ் a ground rule. So அது வந்து we will cover it under TDS itself.
Sir, one small doubt.
Yes.
Suppose I think you had given an example in the earlier class that for Rajinikanth, the home theater system was constructed for him, and therefore the charge for the home theater construction was more than 50 lakhs. And now will it come under service or goods?
Wherever there is TDS, no TCS. So there, where I remember that question, 194M, payment made to a contractor, okay, for construction of home theater in excess of 50 lakhs, okay. So the assessee, even though he is not a business assessee, he is liable to deduct அப்படின்னு சொன்னோம். அது வந்து கான்ட்ராக்டர், இது வந்து more of sale of goods. So there it is only TDS. First thing is for TDS. If TDS is not applicable, only TCS. Okay. Now, clarification. I want to, yes, friends.
This 50 lakh is to a single person in 1 year, right?
Yeah, yeah, yeah. Per person, not the seller based, buyer based. Before going into the clarification, these are all the clarifications even applicable for 194O. These clarifications applicable, one of the clarifications or two clarifications are very interestingly applicable there also. First, let us go one by one. For computation of threshold, this is applicable for 194O also in the same manner. And if I remember, Saurav was asking me in one other case also, 1st July when the provision was introduced, how it should be seen. In all these things, they are clarified. Provision is applicable only from 1st October. That is, be it 194O or be it 206C1H, sale of goods, provision is applicable only from 1st October. Hence, any sale consideration received on or before 30th September, no TCS, no TDS. Okay, provision is applicable only from 1st October. இதுதான் key point. However, for computing the threshold limit of 50 lakhs and the 5 lakhs, the consideration received for whole of the financial year needs to be taken. Provision may be applicable from 1st October, but for computing the threshold limit, whether you are liable under TDS or TCS, the whole of the year's financial turnover should be considered. Technically, this means that even if already 50 lakhs is received on or before 30th September, TCS is applicable only for consideration received on or after 1st October. Sir, I have already received a consideration of 60 lakhs. No problem. Under 10 lakhs, no TDS, no TCS. I have already received a consideration of 60 lakhs on or before 30th September 2020. Under that 10 lakhs excess, there is no TCS. But right from rupee 1 sale of October 1st, right from the consideration received from rupee 1 of October 1st, TCS is applicable because the turnover has exceeded. It has been further clarified by CBDT. Even if the sum of consideration received on or before 30th September exceeds 50 lakhs, such a sum is not liable for TCS. Only whatever is received on or after 1st October is subject to TCS. Real time basis la question பண்ண வேண்டிய ஒன்று. Real time basis means if you ask this question in November 2020 for something, November 21 for October 2020, I don't know, but more chances from a student's perspective. This is important, no doubt about it. It is important. The same is for that 5 lakh also. That's why I left that question. So I thought after this clarification I will do. Okay. For computing the threshold limit, take the whole year. But for computing TDS or TCS, only for the period of applicability, whatever has happened before that, never even worry about it. On transaction carried out through stock exchange, not applicable. TCS shall not be applicable. Okay, please understand, shall not be applicable. Okay, in relation to transactions of securities and commodities carried out through recognized stock exchange, and transaction in electricity, renewable energy certificate, energy saving certificates, these are not also covered. Okay. Motor car, something interesting to understand. I go back here. Please understand. Sale of motor car of a value exceeding 10 lakhs. 1% tax has to be collected, or 0.75% tax has to be collected. Okay, that is COVID rate. 1% tax has to be collected. So suppose our friend Nasir is buying a motor car for 22 lakhs. The seller, the dealer, will collect 22 lakhs plus 1%, 22,000. 22 lakh 22,000. Remit the 22,000 in the name of Nasir to the government. That is known as TCS. There is an exception to this provision. However, this is not applicable for a transaction with the dealer. That is, the company selling to dealer. You know? Okay, I am the dealer. Okay, I am the dealer of cars. The company Maruti Limited gives cars to me. I sell it to customer. This provision is applicable, that is the existing TCS provision is applicable only for sale to a customer. not for sale by the company to the dealer. Okay, not for sale by the company to the dealer, dealer to the consumer, ultimate user. Their tax has to be deducted at source if the car value exceeds 10 lakhs. Okay, now the beautiful clarification given by the CBDT. Okay, there are two sections which cover the provisions of motor car. Okay, right? TCS of 1F, 1H, where the sale is made by the manufacturer or any other person to of car to then 2061F is not applicable. Now, manufacturer to a dealer or any person to a dealer, 2061F is not applicable. Since it is not applicable, now 2061HA becomes applicable. Okay? 2061F is not applicable, Ana 206C 1H becomes applicable for them now. From this year, Maruti selling car to a dealer, 0.1% they will collect from the dealer if the car value, if the total sale consideration received has exceeded 50 lakhs. Has exceeded 50 lakhs. Where sale is made to a customer, but the individual unit per car does not exceed 10 lakhs. But the value per car does not exceed 10 lakhs. அப்போ உங்களுக்கு தெரியும் 206 1F is not applicable. ஏன்னா only if it exceeds 10 lakhs that is applicable. But collectively the total exceeds 50 lakhs. I buy 10 cars, each car 6 lakhs. 206C 1F is not applicable, but 206.1CH is applicable. Where sale is made to a customer and the provision of 206C 1F is applicable, then 206 1H it will not be applicable. First write to 206C 1F. So in short, if a single car to a customer, if a single car value exceeds 10 lakhs, 1%. If that does not exceed 10 lakhs, but cumulatively it exceeds 50 lakhs, 0.1%. If it is sale to a dealer, 0.1%. Okay. I don't know which is going to be questioned. This is going to be questioned now. This might be in November or vice versa also. Please read.
Sir, sir, this 206C 1F, does it also include warranty and accessories?
No, only motor.
No, like if car is 9,50,000 and warranty and accessories are 60,000,
is the invoice
then
value
will 206C 1F be
is the
applicable?
invoice value exceeding 10 lakhs?
Yes, yes, yes.
Applicable. At the time of purchase, applicable.
Okay.
Sales return, okay. The clarification I want now because the provision is based upon sale consideration only. So sales return, obviously I will not pay the consideration. Discount kudutha, obviously I will not pay the consideration. So this clarification is not needed. Provision is not applicable for consideration received from non-resident airline operator or for fuel supplied in Indian ports. Okay. Okay. Already we know that it is more for resident assessees only. In fact, entire TCS is for resident assessees only. Okay. Two of the major amendments, inclusions in the law, okay, which has a big impact. Okay, now there are many tour program now and leave the COVID times, but there are many foreign tour of people. Okay, so all these things might get the questionable areas in TCS and TDS has increased. So as I told you, they can in both the exams, if they are conducting both the exams, they have sufficient things to work out.
Sir, so every time we need to check the invoice value. If yes, the discount is given at the time of invoice itself, like 10 lakh.
Consideration received, boss. On the consideration received, take 1% TCS.
So then discount will be deducted if it is given in the invoice itself.
Consideration. If the value of the invoice is 51 lakhs and you give a 50,000 discount on 50 lakh 50,000, just take the TCS.
No, because we had a clarification that the discount is not included.
Because that is an irrelevant clarification. Obviously, it is when it is on the consideration, why do you worry about discount?
No. Okay,
It
sir.
is not on sale value. It is on consideration received.
Thank you, sir.
Okay. Now I'll answer this last question and then go to TCS question. Payment made to Mr. Santosh on sale of software. Payment up to 30th September 1.5, October to March 4 lakhs. It has been clarified by CBDT that for, okay, it has been clarified by CBDT that for, okay, measuring the threshold limit, whole years, okay, turnover should be considered. Okay, so not from the date of introducing of provision, but the whole years. In this case, okay, 1,50,000 plus 4 lakhs. So it has exceeded rupees 5 lakhs. Hence, TDS under 194O applicable. Okay, TDS under 194O is applicable. However, it has been further clarified that TDS will be only for the amount, okay, received after introduction of this provision. So, TDS will only be on 4 lakhs, even though 5 lakh 50,000. 5 lakh 50,000 is for measurement of threshold. Is for measurement of threshold limit. But TDS will only be for 4 lakhs at 1%. TDS will only be for 4 lakhs at 1%. So, there are two things. இதேதா 2061H-லியும். Okay, even though the turnover as the consideration received before October 1st is more than 50 lakhs, that will not be applicable for TCS. But to measure whether the assessee is liable to collect TCS or not, the whole year's turnover. So this that clarification they on top itself said is both for 206C1H and for 194O, because both are having the same date of introduction. The clarification was given so. Specify the tax to be collected. இது வந்து நான் நிஜமாவே இந்த கோவிட் ரேட்ஸ்க்காக தான் இதை போட்டேன். Okay, specify the tax to be collected at source in the following cases. Okay, a partnership firm making sale of timber in April 20. Okay, in April 20, which has been acquired by forest lease. Okay, firm sale of timber acquired under forest lease. Okay, firm sale of timber acquired under forest lease. Okay, this is the one, my dear firm. Timber obtained from forest lease. இது எல்லாமே 2.5% தான். But வேற though there are three things, but rate as far as concerned 2.5% or less 25%. Scrap, please remember it is 1%. Scrap, please remember it is 1%. So, okay, tax to be collected at source. Okay, 2.5% of consideration received. Okay, whenever you are receiving, collect it along with 2.5%. Whenever you are receiving, collect it along with 2.5%. Okay, so that is the collection at source. The same timber sold in September 2020. Okay, if it is, okay, firm sale of timber acquired in September 2020. Okay, tax to be collected at source. Okay, 1.875. 1.875% percentage of consideration. I just typed this for COVID year only, nothing else. Not the amendment based question. The COVID year rate chuma one work pannalandradhukaga. Alcoholic liquor, my dear friends, alcoholic liquor, as far as alcoholic liquor is concerned, okay, there is no change. 1%, be it April or be it September, okay, sale of alcoholic liquor, okay, April or September, okay. TCS is 1%. In other words, okay, COVID year relaxation is not applicable for, okay, liquor. Okay, this is not applicable for liquor. So, okay. Sale of scrap in December where the buyer fails to provide PAN in the minus 25% கிடையாது. Minus 25% is only for normal rates. Where PAN is not provided, TDS new, PAN is not provided 20%. 20% minus 25% illa. Yena, that is not said in 194, it is said in 206 AA. Anga they have not changed minus 25%. So here also, that minus 25% will not work. Okay. Sale of scrap where PAN not provided. I'll teach you this provision to recollect. In case of TCS, other than 206(1)(h), 206(1)(h is for the sale consideration of goods. Other than this, if PAN is not provided, twice the rate or 5%, whichever is higher. Okay, if PAN is not provided, twice the rate or 5%, whichever is higher. Okay, COVID year relaxation is not applicable for PAN not provided assessees. Okay, COVID year relaxation. Okay, hence, in the case of scrap, okay, twice the rate, that is 2%, 1% is the normal rate, or 5%, whichever is higher. So 5% will be applicable. Question number 2. In the following cases, specify the tax to be collected at source. Thomas Cook, a foreign tour operator, has various tourist programs. Mr. Karthikeyan has availed 15 days around Europe package for himself and his family, 20 lakhs. Lalita avails 5 days around Dubai package of 2,50,000. Joyful Singapore package availed by Srinivasan 5 lakhs, but Srinivasan fails to provide PAN. First thing with regard to OTT, that is overseas tour operator, OTP, overseas tour operators is threshold limit kadayadu. Threshold limit is 0. threshold limit is 0. Please understand that for OTPs, threshold limit is 0. Okay, question number 2. For overseas tour program, okay, TCS is applicable irrespective of quantum of consideration. Okay, in other words, threshold limit nil. So please remember this, that is threshold limit nil. Okay, rate of TCS 5%. Rate of TCS 5%. Mr. Karthikeyan, Mr. Karthikeyan, 20 lakhs is the value. TCS will be 5%. So totally they will collect from him 21 lakhs. The tour operator Thomas Cook will collect 21 lakhs. Okay, நம்ம friend Lalita, okay, here from Dubai போறலாம். Okay, 2,50,000 again into 1%. So they will collect 2,52,500 from her. And here is a case of Sreenivasan not providing PAN. Not providing PAN, TCS shall be twice the rate, which is 10%, because 5% normal rate, or 5%, whichever is higher. So in his case, it will be 10%. 5 lakhs is what he is doing. Into 10% they will collect. So 5,50,000. Questionable area, I feel. Okay. Question number 3. Mr. தலைவர் approaches we convert forex authorize the dealer for making few forex payments. The dealer approaches you for understanding the TCS impact. Payment to a hospital in United States. Okay, so this comes under the tour package தவிர மிச்சதெல்லாம் comes under the same provision of 194(1)(g), but here there is a threshold limit of 7 lakhs. Here there is a threshold limit of 7 lakhs. So first let me write it theoretically. Okay, provisions are covered, not all, okay, majority provisions are covered under 194(1)(g). Okay, okay, other than tour program. So if it is other than tour program, what it is? Okay, threshold limit 7 lakhs. Threshold limit is 7 lakh. Rate 5% on the amount, okay, exceeding rupees 7 lakhs. Rate 5% on the amount exceeding rupees 7 lakhs. Okay, however, 0.5%, however, 0.5% on the amount exceeding rupees 7 lakh, if it is repayment of educational loan taken from a financial institution. இதுதான் provision. Okay, again questionable area. Okay, other than tour package, the threshold limit becomes 7 lakh, rate becomes 5% on the amount exceeding 7 lakhs. Okay, but in the case of educational loan repayment, it is 0.5%. Now, payment to a hospital in United States for his medical treatment 10 lakhs. Part A. Okay, payment exceeds rupees 7 lakhs. Okay, exceeds rupees 7 lakhs. So on the 3 lakhs, he is liable to deduct 5%. On the 3 lakhs, he is liable to deduct 5%. So it will be 3 lakhs into 5%. It will be 3 lakhs into 5%. Okay. Okay, 15,000. So the operator, that is the authorized agent, will collect from him 10 lakhs, that is the quantum, plus 15,000, 10 lakh 15,000. When you write the answer, please write it fully. Okay, right? Okay, AD, authorized dealer, shall collect, okay, 10 lakhs is the quantum of service plus 15,000 TCS, 10 lakh 15,000. Part B. Payment of donation to Dayanand Mutt in Chicago, 5 lakhs. The payment is not exceeding the threshold limit of 7 lakhs. Okay, donation to Dayanand Mutt. Okay, right? Okay, the quantum has not exceeded threshold. Hence, no TCS. Hence, no TCS. The quantum has not exceeded. Okay, so no TCS. Part C. Payment of loan taken for a daughter's higher studies 7 lakh 50,000. Okay, exam நான் type பண்ணும்போது மறந்துட்டேன். Examல interest portion they might give you separately also. Of this interest is only 1 lakh 50,000. Why I am saying? நம்ம usually TDS provision only for the interest TDS is applicable, not for the principal portion. Not for the principal portion, only for the interest portion. Whereas, when it is remittance outside India, I take the whole quantum, principal plus interest, if it exceeds 7 lakhs. And that's why the rate has been kept friendly as 0.5%. Okay. Part C. Okay. Payment for educational loan, okay, exceeding rupees 7 lakhs. So in this case, only 50,000. Rate is 0.5%. Rate is 0.5%. The quantum will come to 250 rupees. Okay, AD shall collect, okay, how much? 7 lakh 50,000 plus 250. ஓகே 7,50,250. ஏன்னா நீங்க வந்து குவாண்டம் 250 பார்க்காதீங்க. Don't look at like government is monitoring that foreign payment. Okay, now they will track the recipient. It is income accruing or arising from India for the recipient. So they will track the recipient. So don't look at the quantum. It is a tracking. TDS, TCS mechanism is a tracking mechanism and not a collection mechanism. Okay, it is more to do with the tracking. Okay, right. At the payment for loan taken for a film project. Okay, payment for loan for film project exceeding rupees 7 lakhs. How much is that total? 11 lakhs. So that 4 lakhs. Inga 5%. It is not education. It is not education. So 5%. 4 lakh into 5%. 20,000 AD shall collect. Okay. The 11 lakhs which they have to collect plus this 20,000. 11 lakh 20,000. Part E. Payment for hiring private jet 16 lakhs. TDS is liable to be deducted for the same. The ground rule is that wherever TDS is applicable, TCS is not applicable. Where the assessee is liable to deduct tax, then okay, AD is not liable to collect TCS from the assessee. No, Unnati, it is on the total quantum, on entire 9 lakhs. In your given case, it is on entire 9 lakhs. Before October is different. After October, whatever quantum.
Sir, is there any condition like on whose education the loan is repaid or something like that?
Raja, once more, Raja.
Sir, on whose educational expense there is repayment of...
No condition. Specify tax to be collected at source on the following. Maruti, a car manufacturing company, sells car through various dealers. The following are the details pertaining to different dealers. Okay. Question number 4. Section 206 1H is applicable only from 1st October 2020. Section 206 1H is applicable only from 1st October 2020. Okay. The said section is applicable if the total consideration received for the financial year exceeds rupees 50 lakhs. Okay. The total, the set section, probably Unnati, you will get the clarification when we do this. The set section is applicable if the total consideration received for the financial year which we are talking about exceeds rupees 50 lakhs. If it exceeds rupees 50 lakhs, then 206C 1H becomes applicable. Then 206C 1H becomes applicable. Okay. For measuring the threshold, the whole year will be considered. But TCS is applicable only for sale consideration received on or after 1st October 2020. Okay. So, for measuring the threshold limit, my dear friends, I will take the whole year. But September, I have exceeded 50 lakhs. Can I go back and collect the TCS? The answer is no. The answer is no. Okay, right? So here, let us speak about one by one. Mr. Ram, sale up to 30th September. Sale means here I assume that consideration is received. Okay, I should have returned consideration. Please take it as consideration. 1 crore 5 lakh. After that, 1 crore 40 lakhs. 0.1% is only on 1 crore 40 lakhs. In the 55 lakhs, why I am saying 55 lakhs? On the amount that has already exceeded 50 lakhs. There is a 55 lakhs which is already on that TCS not applicable. But from 1st of October, right from rupee 1 you receive, it is applicable. So this 1 crore 40 lakhs is only liable for TCS. Okay. Now, Mr. Ram. Okay. Mr. Ram. For him, okay, threshold has exceeded, okay, before 30th September. One question alone, I will write detail. However, for such excess, TCS can never be collected. Okay, for such excess, that is before 30th September, whatever has happened, you cannot collect. Okay. Sale or consideration. Consideration received on or after 1st October is fully liable for TCS at 0.1%. At 0.1%. So what happens? 1 crore 40 lakhs. TCS will be into 0.1%. So you will collect from him 1 crore 40 lakhs 14,000. You will collect from him 1 crore 40 lakhs 14,000. Fully liable. Because already the threshold is for the year. TCS is for the period, only for the financial year 2021, I am saying. But there is a possibility of questioning. I told you, real time the question panninda romba interesting. Mr. Lakshman.
Sir, here Ram, Lakshman are dealers and we are assuming sale to a single buyer, is it?
No, sir. This is from a company to the dealer, sir, where 2061H is applicable. What you are saying is from a dealer to a customer. Here I am only talking about dealer. So only 206C 1H is applicable.
Oh, okay, sir. Thank you.
Mr. Lakshman. Sale sorry if I am writing sale, is consideration received up to 30th September is only 45 lakhs. The first 5 lakhs of consideration received on or after 1st October 2020 is not liable for TCS. Okay, only if it exceeds 50 lakhs, it is liable. So, first 5 lakhs is not liable. Okay, the balance is liable for 0.1%. So, what is the consideration received? 65 lakhs. But remember, when I am doing 65 minus 5 lakhs, because 5 lakhs you cannot, okay, 0.1%. So you will collect from him 65 lakhs 6,000. One crore 5 lakh, entire 25 lakh. You can see this is not exceeding the threshold limit, but no option. But they are there because, okay, the first answer. Threshold has exceeded. Oh, okay, the same answer I'm copying down. Okay, so here your 25 lakhs is subject to TCS. It is the same answer like Lakshman. It is the same answer like Lakshman. Okay, this is 25 lakhs. Okay, the first 25 lakhs of consideration received, okay, on or after is not liable, the balance only. So it is 1 crore 5 lakhs, 1 crore 5 lakhs. Okay, when I do 1 crore 5 lakh minus 25 lakhs into
Sir, for e-commerce operator also, it's like the same treatment. Sir.
for
E-commerce operator.
amam. Yes, Guhan. Okay, consideration received up to 30th September exceeds rupees 50 lakhs. However, nothing is received between 1st October and 31st March. Hence, no TCS. Okay, there is no, even if it is 1 rupee, it's okay TCS, but if it is nothing, okay, consideration received The small customers எல்லாம் அந்த consideration வச்சு நிறைய tax planning பண்ண முடியும். But 0.1% is nothing but generally seen. Mr. Vibhishan not providing PAN. Okay. So I take this part. Okay. I take this part. Consider on a factor is liable for a TCS of, okay, 1%. TCS of 1% since PAN is not provided. I repeat one thing. Okay, 194O and 2061H க்கு இருக்கிற இது similarity. There also, if PAN is not provided, it is not 20%. It is only 5%. Here also, if PAN is not provided, twice the rate or 5% illa. Twice the rate or 1%, whichever is higher. So obviously 1% will be higher. Okay, so please remember that. 1 crore. 1%. So you can see 0.1%, it will be only 10,000. PAN is not provided higher rate. Question number 5. A car dealer approaches you on the quantum of TCS in the following cases. RK Private Limited purchases one car every month for a consideration of 8 lakh. Consideration is paid immediately. Okay. Section 206(1)(f) is not applicable as single unit value does not exceed rupees 10 lakhs. Okay. Section 206(1)(f) is not applicable as the single unit value does not exceed 1 lakh. Okay. The single unit value has not exceeded 1 lakh. However, if the cumulative value exceeds rupees 50 lakhs, then 206(1)(h) will become applicable. Okay. However, the cumulative value exceeds. Okay. So now, in this case, 206(1)(h) consideration up to September 2020. இந்த எல்லா கேஸ்லயும் நீங்க 0.75 கூட போடலாம். ஏன்னா I mean 0.075 கூட போடலாம். ஏன்னா except PAN case, all other cases, because the provision itself was introduced from 1st October. Okay, the provision I have taken 1% rate, 0.1% rate. You can put 0.075, okay, as the rate also, because provision itself is introduced. Okay, consideration up to 8 lakhs per car into 6 cars, 48 lakhs. Consideration from October to March. Again, the same 48 lakhs. Okay. Since the threshold is rupees 50 lakhs. Okay. Since the threshold is rupees 50 lakhs, consideration received after October, okay, is liable for 0.1% of 0.1% TCS. Okay, only on the amount exceeding rupees 50 lakhs. So what happens? The first 2 lakhs you will not have. So 48 lakhs minus 2 lakhs, okay, 46 lakhs. In this case, I will do the COVID rate. In this rate, I will do the COVID rate 0.075% for COVID year. Okay. Okay. In this case, I will do the COVID rate because obviously for this COVID rate only will be applicable into 0.075%. Okay. So it will be, he will be collecting 46 lakh 3,450. RK Private Limited purchases 2 cars.
So it's nine.
Sorry?
The total amount collected will be 96 lakh 3,450.
I'm only talking about September to October to March. Yes, I understand what you are saying. 96, this 48 also included 96. I accept it. RK Private Limited purchases 2 cars during the year. Car 1, 26 lakhs, car 2. Okay. Each car, the consideration exceeds rupees 10 lakhs. Hence, 2061F is only applicable. Okay, 2061F is only applicable. TCS of 1% for April purchase and 0.75% for the other month purchases, December purchase. TCS will be, okay, so for April purchase, the value is no threshold limit, nothing here, because 10 lakhs the threshold limit, okay, into 1%. So you will collect from him during the month of April this amount. Okay, for December purchase, okay, for December purchase 41 lakhs. This will be having a COVID year benefit of 0.75%. So you will collect Public Work Departments of Government of Haryana. That itself, there itself seal it. Okay. TDS, TCS provisions are not applicable for government. Okay, right? TDS or TCS provisions are not applicable if the assessee is central or state government.
Sir,
Raja?
sir, where 206C 1F is applicable, for the same transaction, 206C 1H won't apply, right, sir?
No, any one only.
Like for part B, the specific prevails over general.
Yeah, I understand your question. In that case, 206 1H will not apply. If 206 1F is not applicable, only 1H. If 206 1F is applicable, then 1H will not apply.
Thank you, sir.
Specify the circumstances under which 206C1H is not applicable. Okay, allow me to copy the answer from our Word file itself. It is again for government, import, everything. This is not applicable. Okay. TCS is not applicable if the buyer is local government, local authority, embassy, import of goods, and also the last point of airline. I will include that.
Excuse me, sir.
Yeah, I'm listening.
Sir, with respect to 194.0, my doubt is now if tax will be on the amount if that exceeds 5 lakh rupees or it will be on the entire amount. For example, if I received an amount after 1st October only, I received some 8 lakh rupees. So whether
Yeah,
yes,
I got your question, friend. I'll tell you two answers. Okay, after 1st October, whatever you received, if it has already exceeded 5 lakhs on the whole amount, suppose
hmm,
like this, in this case, okay, okay, sorry. With regard to TDS, it is on the total quantum. There is no on the amount exceeding 5 lakhs and all. 5 lakhs is a threshold. More than 5 lakhs on the total quantum, TDS is applicable. But if it is only for the consideration or the value of transaction happening between October to March and not for the transaction which has already happened between April to September.
okay, sir, understood. Thank you.
So TCS is not applicable if the buyer is government, local authority, embassy, persons importing goods, and not applicable for non-resident airline operators. Okay. This is the TDS and TCS amendments. Even might be for 5 marks, 6 marks, but I want you to sweep that 5 or 6 marks whenever the exams are. Okay. We will meet for the next session where faceless assessment and faceless appeals are the key aspects which are going to be discussed. And if time permits, we will complete NR also, but keep your mind open, okay, by after completing faceless assessment and faceless appeal, we will know whether it is going to be an extended session or we will have one other day of class, one other session of class maximum. So meet you 6 p.m. same link you can join for faceless appeals and faceless assessment. All the best, friends.